Hello, my name is Sol An, Senior Investment Analyst from Mirae Asset. Among the consumer sectors, we expect consumer discretionary as well as services to show a stronger recovery than staples. For example, restaurants, travel, sportswear, and apparel sales are expected to show strong growth as the country reopens, whereas staples categories have generally been much more defensive as people consumed more packaged food and beverages while staying at home and even stocked up more products preparing for lockdowns or quarantines under zero COVID. Within staples, those with higher on-trade consumption or high reliance on restaurant channels such as beer and condiment companies would benefit from reopening. For example, pre-COVID, roughly half of the overall beer consumption occurred on trade. In the near term, we may see some hiccups with rising confirmed cases, but soon we expect to see full reopening, which will drive strong consumption growth in coming quarters. Leading companies will rebound strongly after the tough times. Smaller businesses usually go out of business and bigger companies tend to gain market share during the downturn. Thus, we expect many industries to have gone through market consolidation in the last few years. For instance, according to Goldman Sachs, an estimated 100,000 independent restaurants in the US had closed by the end of 2020 due to COVID, compared to around 8,000 during the Great Recession in 2008 and 2009. We expect China to be in a similar situation this time. Meanwhile, companies have enhanced their cost structures over the last 2 years, and thus we expect to see higher operating leverage kick in once the top line recovers. Overall, we expect leading companies to emerge strongly when consumption recovery as the country reopens. China's consumption activity was heavily hit by the zero-COVID policy in 2022. Consumer sentiment declined to a record low level amid tight restrictions. Overall retail sales in December 22 remained 20% below that of 2019, with offline activities or discretionary spending generally seeing a bigger impact. Meanwhile, household saving rates reached a record high level, pointing to high pent-up demand for consumption. We think these excess savings can be translated into consumption as consumer confidence recovers along with the reopening. In fact, the country's reopening progress has been faster than the market's anticipation, and we are finally seeing the light at the end of the tunnel. In addition, the government has announced meaningful relaxation measures as well as policies to stabilize the property market. For instance, they have even relaxed the 3 red lines related to the property sector. Furthermore, the regulatory reset for the platform economy has been completed, and we have been seeing new game approvals which should revive investor confidence towards China market. We believe China will focus on growth this year, and we expect private consumption to be the major growth driver of China's economic growth, benefiting consumer companies in 2023. Consumer companies suffered in the last 2 years amid the pandemic, but we believe the worst is behind us. We expect reopening to be the major growth driver in 2023, along with the government's focus on economic growth. We expect consumer companies, particularly in discretionary and service industries, to rebound strongly as the outdoor activities resume. Many local brands have become much more competitive during the downturn, and we also expect to see them rebound strongly when consumption recovers in the coming quarters. We believe Chinese consumer brands will benefit from this strong consumption recovery in 2023. Thanks for watching.